Well, a very, very warm welcome to this very distinguished panel. My name is Inger Anderson, and I am the Executive Director of the United Nations Environment Programme, and I have the distinct pleasure of moderating today. We're meeting in this panel as part of the Finance in Common, an audacious and amazing initiative that brings together more than 450 public development banks seeking to step up and lean in on the climate and the climate objectives and the sustainable development goals. And never has it been more important right now with COVID-19 pandemic has driven home how exposed our economies are and societies, risks that we may not see or even risks that we saw but that we didn't prepare for. We are speaking at UNEP about three planetary crises: the climate crisis, the nature crisis, and the pollution crisis. And indeed, these three are visited upon us in the pandemic. So what we're looking for is really meaningful action, moving investment flows away from unsustainable consumption and production patterns, getting away from no financing coal, getting away from deforestation-free food, feed, and fiber, financing that limits pollution and protects our climates, that really shift gears into long-term sustainability. And the public finance has such an important role to play. So this summit is this impressive mobilization of public development banks who are stepping up and really seeking to realign financing strategies, working towards that systemic change in the wider financial systems. So we're going to have 45 minutes of very exciting conversation about how public banks, commercial banks, philanthropy, civil society organizations can work together to truly elevate this objective. There's a joint declaration that will emerge out of the summit, and that has some important starting points, because the need for the full financial system to implement, to collectively shift the strategies, and to ensure that we operationalize those objectives that I spoke to. In this panel, we are going to be exploring how we'll get the entire financial system to finance in common, working in concert to align the mandates and the business model. And how do we upscale from individualized transactions or greening at the edges to greening across the entire portfolio. We in UNEP have been proud to work with the UNEP FI, the financial initiative, and here, amongst others, two initiatives worth mentioning: the Principles for Responsible Banking, which today has $56 trillion signed up. It's about 40% of global banking assets on the private side, working on aligning with sustainable development goals, and of course the Principles for Responsible Investment. Together we're working with PRI on the Net Zero Asset Owners Alliance, which has about $5 trillion of investment moving towards the net zero target. Today, we are joined by four very distinguished individuals. First, let me introduce Dr. Werner, President of the European Investment Bank. And EIB has made some very important decisions just in the last 24 hours that I'm sure we will hear about. And truly, EIB is that largest multilateral provider of climate finance worldwide. We are also joined by Mr. Tim Adams, who is President and CEO of the Institute of International Finance, IIF, that represents 480 global financial institutions. And previously, Mr. Adams was Undersecretary at the US Treasury and handling international affairs. We are joined by Ms. Gail Smith, President and CEO of the One Campaign, which is an amazing organization that does truly innovative work, and we'll hear more about that. Previously, Ms. Smith was the administrator of USAID. I think she has in common with my fourth panelist, Dr. Rajiv Shah, who today is president of the Rockefeller Foundation. That is a large global philanthropy organization that most of us will be familiar with, I'm sure. And prior to Gail, He was the administrator of USAID. So without further ado, let me jump right into the conversation. And the first question is a little bit of a warm-up. I do have to, in advance, apologize if I interrupt you. We are on a strict time schedule, and we have to finish on the hour, on the 1:15, and we would like to have a little bit of time for people to pose their questions and to hear your responses. So I issue that apology ahead of time. But let me start, if I may, with a first question to the four panelists. And really, if I may start with you, and if I may go into first name mode here, my name is Inger. So Werner, if I may, over to you. So now this financing in common and bringing together the public development banks, and you are such a sizable bank. Why are we doing this, and why would that collaboration, what collaboration areas is it really that you seek to align as you're stepping into this financing common partnership? Over to you.
Well, thank you very much, Inger, for inviting me. It's a great pleasure to be with you here today. I can only praise the idea that is behind this conference and behind the collaboration between the multilateral development institutions and the national and regional promotional institutions and development institutions. In these times, alignment and cooperation must be the name of the game. And this is something that needs to be further strengthened. We all are committed, I think, to the Sustainable Development Goals. We know that in reaching the Sustainable Development Goals, we can compete only when it comes to our ambitions, but not when it comes to competing on the ground. We need to collaborate, to cooperate on the ground. And that's something where we are on a good track now, and I'm very optimistic on that. And we, as you indicated, we had our meeting yesterday on our board on the climate bank roadmap. It was a surprising success. It was ratified in the first attempt, first reading, and it shows an enormous ambition for the climate activities of the bank. And we can achieve these only in cooperation with the institutions represented here and many others, not least philanthropy, and last but by no means least, the private sector, because you can forget about the Sustainable Development Goals if you don't give a stronger role to the private sector in achieving it.
Well, thank you so much, and we will hear more about that decision that was taken in the last 24 hours, because it's very, very remarkable and really sets the bar for everyone. But if I may now go to you, Tim. So you're in the private banking side, and nevertheless, as we heard from Werner, playing a very important role in dealing with the public banking side. So from a private banking perspective, what do you see in this new alliance, and how can the private banks associate themselves within the financing in common partnership that we are now seeing emerging here? Over to you.
Well, thank you very much. And again, I'll echo what I just heard from Werner. It's an honor and a pleasure to be here with you and for this noble cause, and to see so many old friends. You know, we represent 480 institutions, including public sector institutions. The EIB is a member. So we have firms across the full intermediation spectrum. And for us, this is our top issue. As I keep telling my staff, this is the most consequential issue we'll work on in our professional careers. And we're certainly seeing a groundswell of interest and support from all parts of the financial spectrum. Our last board meeting just a month or so ago, 50 CEOs and chairmen of the largest financial institutions in the world sitting around saying, how do we get this done? How do we stop talking about it? How do we see action and action on the ground? And of course, all the challenges you've laid out in the preparatory materials are there, but we think that with commitment and with a good strategy, we can begin to bring about alignment and consistency and collaboration. A lot of work to do. We're excited, and we think we can make real progress.
It's wonderful to hear that positive note coming from your side as well. Thank you so much for that. We're going to go to Gail, and you come from a different perch, but a very important one, because you're here representing the civil society and that space of global movements. How do you see that collaboration that the public development banks are now establishing to lean in on sustainability, to lean in on climate? And how do you see that relationship with your world and with civil society organizations such as your own?
Well, thank you, Inger, and it's great to be on this panel with everybody. I think we're talking about finance in common, and ostensibly one of our objectives is to help and empower people, so civil society. And I think part of what we need to look at is how do we organize so that we are systemically and strategically collaborating. One of our biggest problems right now is scale. There's a lot of money on the table, but it's all disaggregated and fragmented. How do you bring that together? I think a couple of things are really important to this, and they also bring in the civil society piece. One is transparency across the board, and this pertains at two levels. One, public banks, the world of private finance, the world of public finance needs to be demystified so people can actually understand where the money is and how it moves. Second, there are a lot of concerns on the part of civil society that need to be heard, and transparency will get us there. The second is some common metrics. Each sector that's involved in this and the groups we're trying to bring together all measure differently. If we can find some common denominators for what we're looking for as outcomes and what we think constitutes success, I think that can both bring the constituent parts together and lead to more sustainable outcomes.
These are important elements that you highlight there, and I think we're going to also be diving deeper into those, Gail, as we move forward, because indeed demystification, transparency, common standards, and a degree of metrics that people understand and have an alignment across is surely what we want to get to in the context of the Paris Agreement and Sustainable Development Goals, which leads me to Rajiv. You're the president of Rockefeller, Rockefeller Foundation, a very well-known, well-established, and much respected organization. So that provides significant funding in important areas. It would be really interesting for us to hear what you see with this Public Development Bank Alliance stepping up and how philanthropy can relate to that.
Well, thank you, Inger, and I also share my thanks to the other panelists, all of whom are friends who I've admired for a long time. I will say, I think your opening really said it all. We are facing multiple overlapping crises, and we need to do something very differently in order to overcome them. One, of course, is a pandemic that's killed 1.2 million people and really caused a massive depression around the world, and is likely to have a longer economic tail than most realize, particularly in emerging economies. A second is the fact that we are warming the Earth. We're on track to be more than 4 degrees centigrade in terms of temperature rise. And even as we know that, we're building 850 gigawatts of new coal power around the world. 102 gigawatts of that is from the Belt Road Initiative, with Chinese financing in 27 participating countries. And then finally, and perhaps most urgently for this setting, is the World Bank estimates that somewhere between 425 and 590 million people will be pushed back under an expanded version, an expanded definition of the poverty line as a result of the current economic crisis. To pull ourselves out of that, industrial nations have done somewhere between 20 and 30% of their GDP in the context of fiscal and monetary stimulus. And emerging economies have done about 6%, and developing nations have done about 2%. That simply is not going to work. If we're going to address these crises, we need that 2% and that 6% to be closer to 20 to 30%. And the only way to get there is a massive public and private infusion of capital that's tied to a global green recovery. So I think the topic of this discussion with development banks, public development banks, and the huge capital pools they represent and potentially represent is essential. And we should be asking ourselves, have we unlocked the full power of those institutions to amass and invest somewhere around 20% of GDP in the nations in which they primarily operate, in the developing world and in emerging economies? We, of course, haven't gotten anywhere near that. Philanthropy can make investments that help to unlock that by taking risks, by building partnerships, by investing in new technologies and new innovations that make that possible. But as storied as some philanthropic institutions are, Rockefeller is one of them, it's such a small part of the global solution that the real question we should be asking ourselves is, can, in Q1 of next year, an emergency meeting of the G20 come together and come up with a global green recovery plan? Can we enable and enhance the ability of the IMF, for example, to take extraordinary actions to get those numbers up? And can we tie those investments to real greening of the economy, the way in Europe they've committed 30% of the recovery to green infrastructure?
That's a perfect place to land, Rajiv, and thank you so much, because that is, how do we flick that green switch in the middle of a crisis? But here we are, and we are paying out stimulus packages. We better not, which are of course loan-based and therefore will be debt. We better not leave to the next generation a pandemic debt as well as a broken planet, which is why this whole conversation is so important. And let me then segue into and take some discussion on the banking side, because as we heard from Rajiv, we need to mobilize from billions to trillions. We need to really augment those investments, and the Public Development Bank have tools that can orient them, not only their own finance, but also leverage private finance for climate and SDGs. And it would be really interesting to have an understanding on how we can scale this up, these existing schemes, and how we can ensure that the collaboration between public and private is even broader than it is today, and how we can truly make sure that we don't think sort of transaction by transaction, but that we think portfolio wide. So let me turn over to you first, Werner. Your new climate roadmap, it would be great if you could speak a little bit about that and the decision taken by your board yesterday, but you also referred to counterparty alignment guidelines. How does this work? Because this is new stuff that is really leading bleeding edge, and everybody can learn from this. So over to you.
Well, for us, that was not a very easy decision either, and I'm aware that others look at it with attention, but also a little bit scared, because it is not difficult to get through and to stick to it. Number one, we had taken the decision also in the context of the United Nations General Assembly, the Climate Summit last year, to go for 50% of lending by 2025 for climate and sustainability projects. That was the first step. And the second step is, of course, that by end of this year, I mean, this is only a couple of weeks away, we want to make sure that everything we do is Paris aligned. So not only the 50%, but also the 100% all. So that means that we want to avoid something that we do something positive for the climate with the first 50% and then destroy the effect by being not clean with the rest of our lending. And that's also the bridge to our partners outside, private or public. It doesn't make sense that a public bank like us is reliably on the climate track, and then our partners use the fund that we provide for them, or we encourage them to get, in order to spoil the whole thing. So it must be something that we have in our agreements, in our contracts, also with our partners outside, that they commit to these objectives as well. And this is something that finds a fertile ground, I must say, with our partners in the MDBs and mostly also in the private sector. When we said, okay, that we must stop funding fossil fuel infrastructure, then I had meetings with big insurance companies who said, well, you're obviously right, because if it is not in the interest of anybody to sit on stranded assets one day, and it is simply not only good climate and responsibility thinking, it's a question of economic rationality, not to invest something that you'll have to write off in 15 or 20 years, but you have it on the balance sheet for 40 years. So this is something where I think we can close ranks with both public and private institutions easily if we base our activities on the same definitions and the same principles.
Now, we hear, Werner, a lot about frameworks. You didn't wait for a global framework to emerge before you put up your hand and said, we're going to be climate leaders. There is some talk about there are too many frameworks out there. How are you dealing with that? What, in terms of measuring and understanding how to move forward on a portfolio-wide investment basis? Is this a challenge to you and to EIB, and how did you nevertheless make these very pro-climate decisions in terms of the policies that you are now enforcing?
It is something that has to be seen in the context of the European Union. The EIB is the EU bank. It was founded in the Treaties of Rome, the founding papers of the European Union. And that means that we have to align with our shareholders, which are the 27 member states of the European Union, and of course the Union itself, represented by Council, Commission, and Parliament. And this is the bridge towards the taxonomy for green projects, which the European Commission is working on and very successfully on. And this taxonomy is basically founding on the green investment principles that we established 13 years ago, over 13 years ago, when we brought the first green bonds to the market, and we immediately saw that it would be absolutely necessary to avoid and safeguard against greenwashing. So it took principles and clear definitions in order to protect yourself against greenwashing and the allegations that go along with it. So therefore, we have a basis that can now lead us into the taxonomy of the European Union. And in that context, we say our energy lending policy last year and now the Climate Bank Roadmap are the first big steps. So it is not an isolated EIB thing. It is something that is part and parcel of the overall European Union climate offensive.
And that, of course, lays a foundation for how future behavior can be, not just by EIB, but by others that can choose to align themselves, whether they be private or public banks. Then let me turn to...
I don't want to produce the impression that we would expect everybody to follow us. We are ready to learn, but you need to make first steps.
Indeed, no, and humility is a fine thing. So thank you, Werner. I appreciate that. I think what we want to understand is that there are some frameworks out there that some banks, private and public, have said, look, we may not have a global framework that everyone has signed up to, but we have enough that enables us to move forward. And from what I heard from you, Tim, that's part of your daily conversation, because this is not easy. It's not easy. So talk to us a little bit about, on the one hand, the shifting to the trillions, if you like, and how your members can seek to lean in on this, but also about the challenge on measurement and on frameworks against which one can measure performance. Over to you.
Sure, thank you. I think Gail hit it in her introductory remarks. We need common metrics, we need common taxonomy, we need common disclosure templates. We need just a common way to think about and measure data. I was talking to a banker the other day who said he wants to fund an LED lighting facility that's going to replace an incandescent lighting facility. The question is, what is the net contribution to reducing the carbon footprint? We don't know. How do you measure it? We don't know. How do you report it? We don't know. Who audited it? But we don't know. Who do you report it to? We don't know. So there's a whole host of things that just the building blocks. It doesn't have to be global. It doesn't have to be, one system, but it needs to be interoperable, and it needs to be built in a way that over time we can have the connective tissue that it is consistent and transparent. Without that, it's highly fragmented. Just on Tuesday, we rolled out an effort on building voluntary carbon markets. Carbon offset trading markets is highly fragmented. So to build these markets, you've got to have transparency and consistency and just a common taxonomy, common definitions, and common metrics. That's going to take time, but we are making lots of progress. And I'm very, very optimistic about the direction of travel.
And in the collaboration that your membership has on the private side, I'm not speaking on your private side, not the public members, with the public development banks, to your knowledge, does that dimension of collaboration make it easier in terms of making those climate relevant investments? Does it enable it because of the financing that would come? And is it difficult to get these two sides to mesh? It might be interesting for our participants here to hear your reflections on this.
So that's the number one issue when I meet with my member firms that they ask of me is how do we make more consistent these various paradigms or approaches? You know, we just had an election in the United States. The biggest challenge we may have is that you have the U.S. with a whole new different set of approaches and standards and definitions and regulatory requirements. And so our job is to try to bring about consistency. You know, capital is a coward. It goes where it's treated well. It flees where it's treated badly. We need to ensure that that pipeline from where there's capital suppliers to capital needs is efficient. We can scale. And the way you do that is the interoperability, the piping has to connect up. But I think the public development banks can play a huge role in providing credit wraps, credit guarantees, especially for greenfield investment. It's very tough for insurance companies and pension firms to invest without greenfield without initial cash flow. So the PDBs can play a huge role in helping us with a common approach, common metrics, but also taking risk early in the project life.
Thank you. I'm going to quote you on capital is a coward because that's exactly right, which is why we need to de-risk it as much as we can to enable exactly to crowd in and make capital brave in liaison with public development banks or others that can help on the de-risking side. So Gail, let me come to you. And again, it's a sort of two-framed question. On the one hand, if you could expand a little bit more on the dialogue that we need to have with civil society in this space, but also on your first point about the apparent multitude of frameworks and the confusion that this causes. I'll put it to you, however, that as we've seen, when you have a block that sets some common standard, actually things begin to fall into a degree of understandable place. So leadership is also important. But anyhow, it would be interesting to hear from you on both civil society as well as on the issue of common frameworks. Over to you, Gail.
You know, Inger, I think one of the things we got to think about is dialogue is great, consultation is wonderful, but there's a difference between information sharing and actual strategic coordination. So if you think about the role of public banks, on the other hand, the role of small and medium enterprises, many of which are very, very small and run by people who could qualify as civil society. There needs to be more than just a dialogue between those two, but in fact, strategic coordination. And this goes back to the earlier point. I think greening portfolios is great. Public-private partnerships are wonderful. I think we risk those being isolated events. And if we want to think big, given the enormity of the crises we're facing, as Raj so clearly pointed out, these are systemic crises. We're not yet operating systemically. Right? And if we want to do that, imagine if the public banks all came together and said, we're going to employ common metrics, common taxonomy, all the things that Tim just pointed to. And we are going to focus on a systemic approach to whether it's climate, whether it's the economic impact of the pandemic, any number of these global crises that we face. That's the way I think we're going to get the systemic change we need, as opposed to what we've got now, which is important but not sufficient, which is incremental change in some places and none in others. So I guess the question before us, in my view, is how do we shift from information sharing to actually strategically coordinating? And let me just give you an example. If you think about vaccines for the pandemic, which everybody is exceedingly hopeful about, if we deploy a systematic response to making vaccine access a reality for everybody everywhere, we shorten the lifespan of the pandemic. If we don't, we extend it. So rather than individual actions, all of which are important, we need to figure out how all of these public banks, all of these institutions can operate in concert and we can affect the systemic nature of all of these global crises.
Thank you. I think the point you make is absolutely critical, because the conversation we are having now what is very much about how can one ensure that kind of integration across this amazing group of banks that have not before stepped up is in unison. And it's difficult and it's complicated, because you have the big banks that we know, AFD, KfW, and you have the agricultural bank of a small developing nation that is also within this coalition. And so finding that breadth of commonality is what is the challenge before us. And here, then, let me build that bridge over to you, Rajiv, if I may, because the issue about the role that foundations and philanthropy brings, it is enabling new thought, it is enabling innovation, it is creating different connects that may not have existed before. And it will be really interesting to hear you reflect on philanthropy in this space with the challenges that you outlined so very eloquently just before. Over to you.
Well, thank you. Let me first say, to build on Gail's point, I think it's so important what she said about having some common metrics and having a truly integrated strategy across many of these multilateral development banks in particular. You know, right now is a time when interest rates are at a historic low. The Rockefeller Foundation and many other philanthropic institutions have, for the first time, gone to the debt markets and borrowed money in order to invest in our mission right now, because this is an important crisis. In the case of the Rockefeller Foundation, it's enabling us to make a one-time special investment of $1 billion in just the next 2 years in a global green recovery. And that is a template and a model that I think most public development banks are frankly following. People are going to the debt markets and leveraging themselves more than they had in the past. That includes the recent announcements from the World Bank and other multilateral development banks. And so the one question I'd have is, could you simply have a very simple statement that some percentage of the funds raised from those actions and invested in a one-time extraordinary recovery-oriented investment right now be allocated to being green? You know, the Europeans have set the tone on that with the 30% allocation in the context of the EU. That is something that could be borrowed and enhanced by real participation from all the multilateral development banks. Philanthropy in particular plays, I think, a unique role in bringing together public and private and shaping new business models and new solutions that can define how those resources are expended. For example, in India, the Rockefeller Foundation has partnered with a company called Tata Power in order to build out 10,000 rural mini grids that are solar installations providing power to about 10 million people and creating the productive base of access to energy and electricity to help those communities move themselves forward on the economic ladder and, frankly, to recover faster from this crisis. And, you know, that's the type of mission philanthropy can take on together with others. But the reality is getting to scale will require the multilateral development banks and others to take these one-time special actions right now and to allocate a fixed percentage of them to something very concrete and measurable, like greening the economy. That is really the only way out for so many emerging economies around the world, and it's the only way to ensure that the global recovery is both accelerated and inclusive of the 1 to 2 billion people in the world who would otherwise simply be excluded from a global recovery from the COVID crisis.
You made a very important point that whilst wealthier nations have been given stimulus packages to themselves, only, did you say, 2% have gone to the developed countries and a little higher percentage to middle-income countries. So, and Gail made another point that if we do not address the entirety of this pandemic, we have addressed nothing. So the point around solidarity is absolutely critical. And I think we also hear from Tim the importance of getting some degree of accord, not accord, that sounds like an agreement, but some degree of harmonization of understanding of how we measure, how we report our footprint in the lending portfolio. Now we're shifting gears a little bit, and we're doing well because we have 10 minutes to run, and we have a lot of questions that have come in, and they are from people that are dialing in and following this conference and this panel and this fantastic discussion. So I am as new to these questions as you are, because they are just coming in live. So I'm going to start with an imaginary question, because there is a participant who says, let's make some science fiction. Let's suppose that we are 20 years from now, so 20 years out, and the world is now sustainable, and CO2 emissions are close to zero, nature is saved, nature is restored, there's no plastic in the ocean, rainforests are growing on new lands. Can you describe what you did, what your organization did, and what happened compared to the past 20 years, i.e. looking 20 years back? What did we do differently? It's a super great question. Gail, let me start with you, if I may.
Well, you know, it's hard. I've worn many hats in my life, and it's very tempting to wear another one. But let me wear the hat I'm wearing now, which is civil society. I would say it is because citizens mobilized and put pressure on governments to act on these issues, and quite frankly, voted accordingly. I think from a civil society perspective, that would be the element that had changed. I would also like to think that much of what we're talking about here today, this alignment, these alliances, the strategic collaboration that could indeed bring trillions of dollars in capital to the problem, had actually been effective, that we had organized ourselves that way. But I genuinely think to get where we need to go, we need an active, engaged, informed civil society across the board, telling governments and the private sector that this is what we expect, this is what we need, and if we all put our heads together and work on it, we can actually get there.
So everybody out there, you heard it. It's about mobilizing and making your voices heard. Let's go to Tim. It would be interesting to hear your reflection. What gear levers did we shift in your world? Over to you.
Sure. Well, it's already shifting because we respond to market signals, and market signals are pretty clear. Our investors, our employees, our customers, everyone involved in our ecosystem, all stakeholders want us to go there. And so we are going there. Again, it's just back to the practical challenges of how do we get there? How do we measure going there? You know, there's trillions that will be intermediated toward a sustainable world. That's without question. The key is internalizing the externalities. How do we price the negative externalities appropriately, and how do we price the positive externalities? How do we have a price of carbon to start doing that? So it really is just the engineering, the building blocks to get us there. I'm hopeful we'll do that. That's what we're engineers. We're going to do that, and I think the direction of travel is already apparent.
Thank you. Werner, if I may pose a different question, but you may also want to think in the future. But there is another question from another participant who says, look, G20 public finance institutions still provide 3 times as much financing for fossil fuels as for clean energy. We heard that also from Rajiv. EIB has shown real leadership in ending public finance for fossil fuels, not just for coal, but also for oil and gas. Now, other institutions like EDFI are starting to make similar commitments. How will EIB work with others to ensure that they follow suit? I know you can't ensure, but nevertheless, and match the EIB's level of ambition in ending fossil fuel finance. Over to you.
Well, obviously, we are ready to cooperate with all our partners in this field. And we can make clear that this is not only a question of political wishful thinking, but also of good economics. We must make this a business case. And we must see the tech sector, the clean tech sector that is going to have outstanding importance in the next couple of years. And we missed that train. We were pretty alone at the train station. So this is something which we need to see not only from an ethical point of view, but also from an economic point of view. And that I'm quite optimistic. And if I build a bridge to the question just before, I mean, what we are doing in the field of vaccines and medications against COVID now fits exactly into this box. We will arrive that dream that the person has talked about for 20 years from now only if we begin to think global and not regional, national, or parochial. And that means that we have to see that it is not enough to fight the pandemic in the industrialized world. It will be necessary from the beginning to think global here. And this is why I'm so grateful for the initiatives from the philanthropy side. I mean, we would not be with Gavi or COVAX and these big initiatives who want to make sure that everybody has fair access to these new treatments and vaccines and therapeutics. So this is something that reminds us that we must, under these present circumstances where we have a real global pandemic, we must think global.
Thank you. Rajiv, again, you can take the looking forward question, but there's an interesting question that sort of also speaks to various previous hats that you have worn. So I thought it fits well with you. It speaks to the industrial livestock sector that is a major driver of deforestation. It's responsible, says the writer, I haven't verified, for 14.5% of all greenhouse gas emissions. It forms breeding ground for new zoonoses. It exacerbates social inequalities and causes tremendous animal suffering. So on that basis then, and thinking about climate change, what would be your advice to the banking sector that engages with the food sector, which after all, last I checked, we all need to eat. So how do we turn this around? You may want to reflect on that as well as the previous questions. Over to you.
Well, thank you. I think that's actually a very important question because so often conversations about climate and how we achieve the net zero targets focuses on the energy sector, and yet it is the food systems and agriculture sector that has an even greater capacity to turn the carbon math around. That's both because, as the person who asked the question points out, livestock-based industrial agriculture is extraordinarily carbon intensive, but also because the agriculture sector has the capacity to actually sequester carbon in very efficient and very practical ways. And so I would say that I think those who run the multilateral and local and national development banks ought to really think about and reflect on agricultural and food systems transformations as very much the pathway, in addition to energy sector transformation, that gets us from a direction where we're headed north of 4 degrees centigrade in terms of temperature rise to something that's more aligned with the Paris numbers of 1.5. And I'm glad the question was asked because most people don't think of it that way. And certainly most finance does not move towards greening of the agriculture sector. That, of course, also requires real consumer behavior changes, and that's a big part of it. And then to go back to that bigger vision question, I'm with Gail. I think it's going to take civil society at massive scale and people using their voice in a very big way and always insisting on more action. And all that said, I think the moment that we'll know if we're succeeding or not will be sometime next year, because it's really hard to imagine how, if we miss this opportunity for a green recovery in the next 12 to 18 months, it's hard to imagine how you get on a pathway towards a future utopia defined by the question that was originally asked.
Well, thank you. And this concludes our absolutely amazing conversation here. I would like to express my deep thanks to Werner Hoyer, who is the president of EIB. I'd like to thank very much also Tim Adams, who's the president and CEO of International Institute for Finance, Gail Smith, who's the president and chief executive officer of the One Campaign, and last but certainly not least, Dr. Rajiv Shah, who is the president of the Rockefeller Foundation. In the last minute that we have before we go off the air, I just want to say that this conference has put together a very ambitious declaration that requires implementation by all the public development banks, but they are also making clear that it will take an all of society effort to make this happen. And I think we heard that very much in this conversation. Collaboration will be critical. Yes, there are many challenges. We need to move towards overcoming them, including by ensuring that we have the measurements and the tools at hand. But zero carbon and nature positive portfolios is the way to go. From our side at UNEP, we remain very much engaged in this field and obviously salute the public development banks for their efforts in this regard. May I again express a warm appreciation to everyone and wish you all a very healthy and good day. Thank you very much, everybody. Bye.
Thank you.
Thank you.
All the best to you.
Thank you. Bye.